why it's restarting now.
Right. There have been voices raising concerns. I know Education and Labor Committee Chairman Tim Walberg has been quite vocal.
He has. His perspective basically is that the Biden-Harris administration's approach put an unfair burden on taxpayers.
And created instability, was that the word? Instability in the repayment system.
Yes, instability. He seemed to favor the Trump administration's efforts, framing them as restoring stability by following existing laws.
Okay. And wasn't there also commentary from Education Secretary Linda McMahon?
Her point was similar, focusing on the taxpayer angle. She stated that taxpayers shouldn't have to guarantee what she termed irresponsible student loan policies.
So different figures, but a kind of shared theme there about taxpayer burden and responsibility.
Exactly. It highlights a specific viewpoint on how federal student lending should operate, who bears the risk.
So let's talk numbers. Who exactly is going to feel this when collections restart?
Well, the figures are pretty stark, actually. You've got over 5 million borrowers already in default.
5 million. Wow.
And it doesn't stop there. There are another 4 million who are, let's say, nearing default. They're really close.
So if you add that up, that's huge. What percentage of borrowers are we talking about?
It suggests nearly a quarter, almost 25% of all federal student loan borrowers could potentially be in default.
25%. That's staggering.
Right.
And the direct impact, the number of people getting these collection notices.
Around 5.3 million Americans are expected to be directly affected when the collection efforts actually resume.
5.3 million. Okay. So what happens next, practically speaking? How does this roll out?
Well, the first step is communication. The Department of Education is going to start sending emails within the next 2 weeks or so.
Emails to those in default.
Yes, specifically to the defaulted borrowers. The idea is to nudge them, encourage them to start making payments again or get into a repayment plan.
So there's a heads-up period.
A short one, yeah. Because then, come May 5th, if borrowers are still in default,
Then what?
they get referred to a collection program run by the Treasury Department.
Okay. The Treasury gets involved. And that sounds like it could get more serious.
They can. Later in the summer, possibly, we might see wage garnishment starting for some.
Can you just quickly explain wage garnishment?
Sure. It's basically when money is automatically taken out of your paycheck to cover the loan debt before you even see it.
Right. And that's not the only tool they have, is it? There's something called the Treasury Offset Program.
TOP, yes.
Yeah.
That's another significant one. It allows the government to take federal payments that are owed to you.
Like what kind of payments?
Things like your tax refund, or even in some cases, Social Security benefits. They can seize those to pay off the defaulted loan.
Wow, okay. So tax refunds, Social Security. That's serious.
It definitely is. Which brings us to the core message, really.
Which is?
If you have federal student loans and you haven't been making payments, it's really, really crucial to restart them immediately.
Don't wait, because ignoring it could lead to these Treasury actions, the garnishment, the offsets.
Precisely. Procrastination isn't a good strategy here.
Okay. But what about people who are genuinely struggling? Maybe they can't just restart payments easily. Are there options?
Yes, absolutely. That's important. There are options. For instance, income-driven repayment plans or IDR plans.
IDR, how do those work?
They basically set your monthly payment based on your income and your family size. So if your income is low, your payment could be low, sometimes even $0.
That sounds like a vital lifeline for many people.
It really can be. It makes repayment more manageable. And besides IDR, there's also loan rehabilitation.
Rehabilitation, what's involved there?
It's a program to get your loan out of default. You typically have to make a series of agreed-upon payments, usually 9 payments over 10 months.
And if you complete that?
If you complete it successfully, your loan is no longer in default. And crucially, you get back eligibility for things like deferment, forbearance, and even future student aid.
So it kind of resets things in a positive way.
It does. It's a path back to good standing.
Are there resources people can turn to figure all this out? It sounds complicated.
Yeah, it can feel overwhelming. But loan servicers, companies like Mohela, for example, they have resources. They can explain repayment options.
Do they offer tools or anything?
Often, yes. Many have things like a loan simulator tool on their websites that helps you see how different plans might affect your payments and total amount repaid.
That sounds useful. And for the IDR plans specifically?
The main place to go is the official government site, studentaid.gov. They have a specific section, studentaid.gov Save Action, with details on the income-driven plans.
Okay, studentaid.gov Save Action. Good resource to note down. Thinking bigger picture now, economically speaking, ending this 5-year pause. That's a pretty big shift, right?
It is. It marks the end of quite a significant pandemic-era economic measure.
And what's the anticipated impact on the economy overall?
Well, the expectation prediction is maybe a slight dip in overall consumer spending, but the real impact, the more noticeable effect, will likely be on financially vulnerable households.
Lower income households, you mean?
Exactly. Those households will likely feel the squeeze the most, having less disposable income once payments restart.
Which could then ripple out, potentially slowing down things like retail sales.
Potentially, yes. It's a factor that economists are watching.
Now, there's another important point, especially for people hoping for some kind of loan forgiveness down the line. What about consolidation?
Yes. That's a really critical warning right now. Generally speaking, the advice is to avoid consolidating your federal loans at this moment.
Why is that? Consolidation sometimes sounds like a good idea, simplifying things.
It can be, but the timing is tricky. There are ongoing legal challenges and processes related to various loan forgiveness programs, like public service loan forgiveness, PSLF, or forgiveness under IDR plans.
And consolidation could interfere with that.
It potentially could, yes. In some situations, consolidating can reset the clock on the progress you've made towards qualifying for forgiveness under those programs.
Oh, wow. So you could inadvertently wipe out years of qualifying payments.
That's the risk. It's not always the case, but it's a significant enough risk that the general advice is caution. Don't consolidate right now if forgiveness is something you're counting on until there's more clarity.
That is definitely something people need to be aware of. Don't accidentally undo your progress.
Exactly. Hold off on consolidation for now if forgiveness is in your potential future.
So, wrapping this up, the main takeaway seems to be collections are restarting, understand the implications, and be proactive.
That's the bottom line. Know what's happening, explore your options IDR, rehabilitation if needed, and take steps now. Don't wait for garnishment or offsets to start.
And while this is a big change, the expectation is that the government will provide support and hopefully work on longer-term solutions for the whole student loan system.
That's the hope, yes. Continued support and perhaps more systemic reforms are likely part of the ongoing conversation. It's a complex issue with deep roots.
Absolutely. Well, this has been really informative. Understanding these changes is crucial for so many people.
Glad we could shed some light on it. It's important information to get out there.
Indeed. And if you, our listeners, found this information valuable, please do consider liking and subscribing. It helps us bring more insights like this to you.
Yes, please do.
Thank you for tuning in today. We'll catch you next time.